Hi everyone, welcome back to my channel. If you're here for the first time, please subscribe and hit that notification bell. Also, please leave a comment in the comment section down below and please do like and share this video. Okay, so in this short tutorial, I want to look at current accounting terms. So basically, accounting is a broad educational subject and it has a lot of career opportunities, and so the terms used in accounting are changing, and that is why I'm here. I am here because I want to keep you up to date with the current terms that are now being used in accounting. So let's go. The trading profit and loss. So we usually prepare the trading profit and loss account. Now we are expected to prepare what is called the income statement. Yes, guys, the income statement. Now, the income statement and the trading profit and loss account, they are the same thing. It's just that the old term was the trading profit and loss, but the current term now is the income statement. So we know that the income statement basically is prepared to show whether a company is making a profit or a loss at a given period. The next term we want to look at is the balance sheet. So you're no longer required to prepare the balance sheet. Now the current term is the statement of financial position. As we all know, statement of financial position, same as the balance sheet, but the current term that is being used now is the statement of financial position, which is the assets, liabilities, and capital of a business at a particular period of time. So we know that all profit-making companies prepare their financial statements at the end of the period. So instead of saying the trading profit and loss, we're now saying the income statement. Instead of saying the balance sheet, we're now saying the statement of financial position. All right, so let's go to our next term. Sales. As we all know it, sales are revenue account. It brings money into the business, right? So you might be asked to prepare the income statement. So from your knowledge of the trading profit and loss, you know that you'll start with your sales, less sales returns if there are any. But now you see terms like revenue. So when you prepare your income statement, you'll have revenue instead of sales. And we know that revenues are the income earners in a business, right? Then we move to stock. So the old term was stock, but now we are introduced to inventory. Inventory are the items bought for resale. And of course, we know that we have our opening inventory and our closing inventory. So basically, opening would be at the start of the period, while closing would be at the end of the period. But stock is old term. So the more current or the new term now is inventory. Then we have our debtors. All current accounts receivable. So debtors is the old term that used to be used, but now we are using accounts receivable, money owed to the business. Creditors. Do you know the new or the current term being used in accounting for creditors? Yes, if you said accounts payable, then you are correct. So accounts payable is now the current term that is being used for creditors, and it refers to money that the business owes to their suppliers. Our next term, fixed assets. Can you give me 2 examples of fixed asset? Right, so you have your property, land and building, machinery, and the list goes on. But instead of saying fixed assets, we are now saying non-current assets. So assets that are bought to be used in the business and not primarily for resale, your non non-current assets. So you have to familiarize yourself with these terms, guys, because when you go to any exam now, more likely you will not see the older terms. You'll be now seeing these recent or more current terms in even the revised textbook. They are using the current terms. So that's why I'm doing this tutorial, basically to get you, or to get you to understand, or to get you to familiarize yourself with the new accounting terms. All right. Next one is our long-term liabilities. So we know that long-term liabilities are those liabilities that we don't have to pay for within a year. So you take over a year to pay for these liabilities. An example would be like your loan, your mortgage, loan for probably 3 or 5 years, mortgage, and so on. Now, instead of saying long-term liabilities, now currently we are saying non-current liabilities. Our next term, return outwards. Now, previously, return outwards was always aligned with the new or current term being used, purchases returns, but a lot of emphasis was not placed on it. But now it is placed on it because the revised textbook and the exam, the way in which their external exams are set, they are placing more emphasis on the current accounting terms. So instead of saying return outwards, we are now saying purchases returns. And we know that this is when the goods return to the supplier by the business. Return inwards. And of course, more current, sales returns. And we know that sales returns refer to goods returned to the business by the customer. So, capital. Now, we know that capital are the resources that the owner puts into the business, or what the owner have left after he or she would have deduct their liabilities. Now, we are moving towards the new or current term, equity. Really, so equity refers to the value that the owner of a business has after liabilities are deducted.
Okay, guys, so here are your current accounting terms. Please ensure that you familiarize yourself with these terms. Also, ensure that you hit that notification bell, because in my next video, I will be looking at the Business Cognate SBA.